Hey guys, welcome to my channel. I'm Greg. I'm going to go over Bitcoin. And I'm going to go over a couple hat tricks. I'm going to show you how hat tricks work. I'm not a magician. Well, what I'm going to do is I'm going to show you how the Fed is, they're magicians. That's right, the Fed. So let's go down and I just go show you a little bit of learning stuff here. I'll let you guys go. I'm going to explain this into the simplest terms so your average everyday person can comprehend what I'm talking about in a simplistic way. Okay, because a lot of this stuff gets overcomplicated, in my opinion. And as most of you probably know, when it comes to anything in life, if you just keep it simple, it usually works out a lot better, doesn't it? It applies to everything in life: business, finances, probably even how you dress, actually, right? Just think about it. If I just keep things simple, create less stress on your mind, everything works out pretty good. And being able to communicate with people, usually keeping it simple. So I'll just leave it at that. So we'll go there. So what I'm going to do is I'm going to go over the, you see that right there? Somebody pulled the rabbit out of the hat, tap the hat, and boom, rabbit comes out. So what does this have to do with the federal funds rate? There's a video. I was going to post it, okay, for the Feds. This is Euro Dollar University. For those that want to watch that, hey, go ahead. I'm still going to go over Bitcoin real brief. I want to go over this real brief, show you guys something. You see this communication tool right here? Community. So this is what they're saying. This is back in 2014. I view the use of the federal funds rate as a communication tool. So now they're starting to admit what they're doing right there, okay? Rather than a hard target. Right. So what happens is that because it's a psychological move from them and getting everybody to believe, okay, get everybody to believe that if we raise the federal funds rate, then we are going to punish all assets. And the only reason this works is because that's what they communicate rather than doing it. They have no control over it. They don't even understand how it works. So what you could do, if you go back and read about Paul Volcker and back in the 60s and stuff like that, and at the end of it, at the end of the 80s, they had no idea what they were doing and how they thought raising their interest rates was going to recover the markets, get rid of inflation, et cetera, et cetera. They had no idea. But they've gotten a little bit better at what they do. So what do? Back in Weimar Republic of Germany, right? They had a problem with inflation. So what happened? If you study Weimar, the central bank right here started sending out money, right? A little bit of money, slowly but surely, okay? But the inflation was like this. The inflation was just kind of going bump, 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 bump. But after World War I, okay, after World War I, people were still concerned with the money. Okay, so they weren't spending money. You know, there was still some after everything that happened after World War I. You look at the history. I'm just giving the basics. You go look into it. People were not spending the money. They're still holding on their money, doing whatever, keeping it under their beds, et cetera, et cetera, et cetera. However, when did the hyperinflation start popping up? When did it start popping up? And back there in Germany, back I think it's the 20s, right? Okay, so then they start spending a little bit more money. Let's spend a little bit. Let's spend a little bit. Let's spend a little bit. And what is that called? That's called velocity of money. And then it started just going up, 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 like so, right? That was the inflation. Why? Because the velocity. So you have to have this. You have to have the velocity of money. How fast those dollars move around. Without velocity, you're not going to have inflation. Very, very little inflation. So what's the next hat trick that the Fed did? Let me erase that. Okay, what do they do today? What do they do today? They're still going to turn on the money printers, right? But the inflation's not like blasting out of control like it did in the 20s in Germany. Well, they understood what went wrong. And what do they do different? Here's what they do different. The Fed, this is the Fed. And then you got the banks, right? Here's a couple banks. And they're going to take that money, right, from the Treasury. Treasury actually prints the money. And it goes on to what? A bank's balance sheet. And over here, bank's balance sheet. All right? So now you eliminate velocity of money because they're just not going to go out there and start dumping it. They have control over the velocity of money and lets them have more control over the situation there when they just take it and put it on a bank's balance sheet or on another institution's balance sheet rather than taking the money and giving it to people. So after the 2020 crash, they actually printed money and gave it to people, right? And that's where that boost of inflation that we got is because it went to the people, to your everyday people. And what did they do with it? What did your everyday people do with their check? They went out and spent it, getting the inflation to go up. But when they put it on a bank's balance sheet, there's no velocity. So that increased the velocity, increased inflation. But over here, if they put it on a bank's balance sheet or an institution's balance sheet, like so, right? There's a lot less velocity or minimal or no velocity over there, even though money printers are on technically, if you will. So that's another hat trick that they've figured out. Okay. So other I guess you could say countries that haven't really gotten their stuff together, they haven't figured it out, or they just don't care, and they just start printing money, and they're still doing the Weimar Republic stuff that they learned their lesson from back in the 20s, which now that they figured that out, we need to keep an eye on that. So that's another hat trick that the Fed does. But for inflation, you have to have this, to have that velocity of money. Very important. You have no velocity, you won't have much inflation, guys. Okay. And they know that. People just assume that's the hat trick. They assume print money, inflation. They just assume that. That's not always the case. Okay. Now, I'm not going to say things are going to end great with the monetary system that we have in the United States. It's just going to last a lot longer. Probably, who knows? I would say another 100 years, maybe even more, maybe 200 years. Who knows? There's no way to get an idea or project when this is all going to end. But it is a fiat currency, and fiat currency, without a doubt, they all go to zero. Okay. Eventually they all go to zero. It's just a matter of when, and nobody knows when. I think it's going to be a long, long time because the central banks like the Fed and even probably the B of E, Bank of England and things, and even the Northern Jersey, they learned their lesson from before. We don't want to make that mistake again. So that's what the whole hat trick is that they play on people. And then also, too, what they're using the federal funds rate for is that communication tool rather than a hard target. And they admitted that. And also, James Powell admitted it, too, in his last meeting 2 or 3 or 4 weeks ago. If you watch this video, this guy right here, I recommend it. If you want to learn more about that, how it actually more than likely works and how complicated the monetary system really is. So now we go back to Bitcoin. So back to Bitcoin. Here's what I'm expecting with Bitcoin, guys. It did come down into more than likely an impulsive move right here, okay? 1, 2, 3, 4, 5. And then it's over here playing in either B wave or an X wave. So I'm still expecting, up into a wave. It probably went A, B, C, and then it's probably going to pop up into a wave and then finally start making its way down. So what I'm still expecting. Could it dump from there? It could, but it just wouldn't look quite right. Okay. So just some sort of complex correction from here to here to here, and then maybe it's going to pop up and then start making its way down and get on with this correction and finish it up. Like I said before, guys, the amount of time in this ending diagonal can take some time. I'm thinking that most of it was done in here, the time wasting for what Bitcoin needed to do, and then down here, and now it's doing a little bit more drop, and then it might do another one of these over here. So you got to be aware of that. So it could drop and then have another time wasting type correction and just go sideways and then maybe do another dump. Remains to be seen. Personally, I'd like to just see a thing go up and then just do one big dump and get on with it. That's kind of what I'm expecting. And the time area is still right now for me, a target time area is the end of January to the beginning of February, and it could go on longer than that. So I want to update everybody and those who are new to my channel about Bitcoin and what is possibly going on with it. But that's for me, this is the most reasonable type of pattern that Bitcoin is in. I have on the daily chart. And then the reason I go with this pattern is because the tag right here in this area, if you see these 2 wicks, it came right down there. I have a trend line right there, and it came up and tagged it and bounced well, not bounce, but it rejected right off that and it came and started coming back down. So more than likely you have a move that Bitcoin is doing is something along the lines here, back up, back down, and then over here, reject, back up, maybe back down a little bit, back up, and then eventually get its way down there. And this area too can be another time wasting area and just sits in there, and people think, oh, it's going to go start dumping. And it could. You can't rule that out. But I'm still going with this significant trend. And there's another one over in this area too that I like to use. This trend right here, if you take it and you just put it something like that, there's another trend right there, just like so. You could put it on the wicks or leave the wicks in and leave it right there. And then more than likely it touched right down in that area, got a nice little bit of confluence for Bitcoin. Take it off log. And depending on where you want to put this trend, it could go down to that area too, this trend area, which that's like a $12,000 or $13,000 target if you take it off log. So I'm kind of expecting that too. You take a look at Bitcoin off of a log or on linear, you can see the correction came down swiftly, a retrace, a swift correction, a retrace, and you can see in this area that it's just slowing up. And you can check your data, your MACD, your RSI, just in a similar situation, up and then coming back down on the daily, have bullish divergence. And then check the, I checked 3-day chart too, came back down here. That was the swift correction, back up, have bullish divergence potentially on the 3-day chart. And then also too, if you take a look at the weekly, here it is, the most swift part of the correction, back up and then maintain bullish divergence on the weekly. And then you can take a look at the 2-week MACD. The 2-week MACD right now is the one that I'm looking at, and you can see the slowing of momentum in this chart for the 2-week right here. So slowing of momentum. These two PPO, the lines right here, the PPO on the MACD is telling you it's very much slowing in momentum. So coming down to conclude something, okay? Same thing in the RSI, back up and coming down to slow down into something, okay? There's no doubt about that in my mind that it's certainly slowing up in something right now, guys, okay? So the indication that if it's going to just continue to go down is on the 1-week chart. If you see this whole area break that portion of the RSI and it could continue to trend down, that would be your signal, if you will, that this could continue to go down. However, looking at all the statistics based on those time frames on those charts, it looks pretty good, and it does seem to be slowing up in momentum in that area using MACD, different time frames. I will go over the 12-month chart with you, and this is brought up a lot, and that is an ugly, bearish engulfing candle. My only issue is with this on the monthly chart, this bearish engulfing candle, is this is only one data point. Okay, so you have one data point on the yearly chart. You want to look at other ones too, 10-month, 9-month, maybe even the 11th month, and go through all your suite, your 1 month, and just look at that. So as an example, if I go to say a 10-month chart, then start painting a little bit. Let me put it on logarithmic for you. Starts painting a little bit different picture. So your data points, using just one data point on your chart is not a good idea. So saying the 12-month chart and you're doomed is probably not a really good idea. You want to go through other data points because the trend, the signals for the trend change, we're going to start on the lower time frame, and then eventually it's going to build out to the higher time frame chart. So I just don't think it's a very wise. So let me go to the monthly chart and let you guys take a look at the monthly chart. The monthly concern is the RSI is the lowest it's ever been. You can look at that in a positive way. You can look at that in a negative way. It continues to trend down. It means it's going to continue to go down, and that's a really good possibility. The positive way of looking at this is it's the lowest it's ever been. It's getting itself resetting everything to go into another run. Either way, at some point into the future here, probably in 2023, I would suspect at least a really, really good bounce for Bitcoin if it's not going to be going into say a bull run, some sort of significant bounce. And if this is going to be a bounce, guys, in my opinion, Bitcoin is not going to do go into a bullish sequence, if you will, or another bull run, or prepare itself for another bull run. In my opinion, this will be a massive bounce, and you probably will see some God candles over there, because corrections usually can rip a lot harder, swifter, and faster than, the slowing up. Okay, let's get ready for the bull run. It usually hangs out in that area, and then it just starts trending up. Kind of little, you could have some God candles in there on the third waves and things like that, maybe the end of the first wave, but it usually doesn't take off quite as swiftly as it would in a correction. So as an example, I've showed some guys how, some assets like to, go up into an A, back down into a B, taking out that whole A, and it just rips. It just rips onto a C wave, just like so. So that's something like that. It could happen over here with Bitcoin, maybe lands in this area, it go up into a A wave, come all the way back down, take out that low into an B wave, rips in an A wave, come back down for a B wave, and then it rips into a massive C wave like that, guys. It could, you can't rule that out. I'm just saying that's how it could rip, and you could have a God candle over here if that's a corrective bounce. That's my take on it. Just wanted to throw that stuff, share this information out there with you guys. If you do appreciate what I've just shared with you, do me a favor, drop a like, hit the subscribe button. Peace.